So you're looking for a house. How does a lender qualify you for a mortgage, and what you as a potential home buyer need to know in order to make sure that you're getting the right answer? As a lender, there's a few big things we're always looking for when qualifying: credit score, income, down payment, and assets. And what I see sometimes is I'll get a call from someone and they'll say, "Hey Chris, I'd like to talk to you and your team, but the other lender declined me." And my first question always, why? Why did they decline you, and what was the reason? And what I'm trying to figure out is, okay, what are the red flags I don't know about? Because if there's a red flag that I'm hearing from another lender, I may not have that potential buyer fill out an application because I never want to run someone's credit if there isn't a possibility. I'm going to ask certain questions to figure out, okay, was there a bankruptcy 2 months ago that wasn't disclosed? But what I often hear is, yeah, I don't know. So if that's the case, and a lender tells you you don't qualify, you need to ask why, and here's the reason for that. Number one, credit. And I'll use VA for example. There are a few really big VA lenders, and potential home buyers think they do a lot for veterans. The reality is they don't. If you're under a certain credit score, they deny you just based off that. Different lenders have different minimum credit score requirements. For us at Homestead, for example, anything below 600 is a hard no for us. However, there may be another lender that will do it below 600. Another example is conventional. Most lenders have it where if you're below 640 or 660, they'll decline you off that. So it's really important that you ask why, and if the decline was due to being a credit score driven issue, and if it was, what can you do to improve that score? The next one is debt to income. And this is always an interesting one for me for a couple reasons, mostly because I think it's really important for you to know how different lenders qualify. Now let me give you an example. If someone fills out an application with us, let's say it's a $400,000, and I'm looking at it and the debt to income is at 80%, which is extremely high. The next thing I would want to do is there any debt that we can pay off or any income that I may be missing, such as overtime or bonus income? Now I do those two things and there's no additional income we can use and there's no debts we can pay off. So the debt to income is still 80%. What I'll do is say, okay, what can they qualify for? And I'll have a conversation with you based off that. Because I would rather say, listen, I can't do $400,000, but I can do this, rather than just saying, I can't do it and leaving it at that. And if you're set on a $400,000 price point, what steps can we take so that we can get you to that price point? So if you were declined because of a debt to income issue, you always want to ask, well, what could I qualify for where my debt to income would be in line? Because at the end of the day, you want to be able to afford your monthly payment and still have a quality of life. The last one is down payment and assets. Now this is a tricky one. There are down payment assistance programs, and if you qualify for one of these programs and you have no money to put down, great, that's what you should be pursuing. If you're utilizing a VA loan, you don't need to have money down. Now the VA loan thing can get a little tricky too, because in practice, would it be a good thing to have a couple extra $1,000 in your bank account? Yes, of course. But have I seen and been able to get veterans into a house when they only have about $1,000 at most in their bank account? I have. So I think VA and USDA, for that matter, are in totally different worlds, and it's really important to make sure you're talking to the lender if you're like, well, I don't have any money for closing, so I can't move forward. So if you don't have a ton of money for closing, there are options. We can talk about seller concessions, which I have a video on, and we can talk about a lender credit, which I also have a video on. Where we run into positions where people really need a bigger down payment than they have is when we're dealing with jumbo loans, or if they have literally nothing. If someone makes a lot of money and they want to do zero down, those down payment assistance programs are not for rich people who are bad at saving. So it's important to note in cases like that, what I'll say is, your payment right now is this, your new payment is going to be this. Let's start saving the difference, and here are the couple ways we can do that. So if a lender tells you that you can't proceed at this time due to down payment or assets, I'm happy to help and find a creative way to get you moving forward. The key point of this is that people look at loans differently. If you have questions on how I can help you get pre-qualified, my contact information is below.